What's going on, everybody? The Fed came out today and everybody was ready for the pivot. Well, the market started rallying up. Well, as we probably all know, it started flagging and people were getting so very bullish until Jerome Powell came out and told everyone to shut up. And then the market completely tanked on its face, unfortunately. And that's what happens when you're overly confident, just strumming down the hallway. You're watching the Stock Market Brief Show. My name is Michael Silva. Today, I want to talk about an important sector that you got to keep a close eye on, because once we get through this episode, I'm going to talk more towards the end in some individual stocks. The market could get hit and it could continue to get hit, but if these hold up, I think we might be okay for a little while. Let's go ahead and get into it. So Powell sees that we are going to have higher rates in the future. He came out, he was quite hawkish, but they might be smaller, okay? So yes, as you know, despite people were like, oh, he's going to slow down, he's going to do this, but it was just very hawkish. So it doesn't change the situation at all, okay? He's still a hawk. Until that changes, that's when it changes. So you got to continue to be tactical and continue to be careful. Same story goes. Now, this is crazy because we still have a lot of data to come out, okay, including CPI. That's not even on this list. It's later into the month. But we have non-farm payrolls this week. On Friday, we have ISM non-manufacturing, balance of trade, etc. Okay, these are tomorrow. The non-farm payrolls, which is going to be a huge one, is on Friday. So how'd the market do overall? Let's take a look at that. We're going to look at yields. The 10 and 2, it's at negative 51 basis points. Okay, the 10 and minus 3 month is at minus 12 basis points. Typically indicates that a recession is around the corner. A lot of other people say, oh, this is when the Fed pivots. Right when it goes to inversion, they're going to start pivoting. Okay, well, that hasn't happened yet. So what are we going to really position our portfolios for that to take place? Are we just going to go long, full bore, 100%? I tell you what, there's so much confidence out there on the Twitter space, and people know exactly what's going to happen, right? You got to be very careful with that type of confidence, because if you listen to it and all of a sudden position, greatly, you can get really hurt. So, I say this: if people get overly confident, I'd ask them what their positioning is, and that'll show their real confidence level. Okay, posted that on Twitter earlier. 10-year yield started to take off a little bit. Slightly down on the day, but then it recouped some of it. It looks like it's going to continue to break out, so we'll continue to watch that. Bonds down slightly on the day and still within this overall downtrend. A big one to watch is going to be copper. This looks crazy to me. This thing is just, remember we talk about contraction or expansion leads to contraction, right? Expansion. Look at this thing tighten up like crazy. If this thing starts breaking down, remember this is called Dr. Copper, right? For a reason. It's a good, it's a good indicator for how the overall economy is doing. So when this tanks, that's not a good sign, and it's already tanked quite a bit. And then on top of all of that, if you just look at the technicals, we had a nice big update, and now we have a shooting star type candle, okay? So we'll continue on and we'll look at the dollar. The dollar is still in this compression pattern. I think it actually closed. It hasn't fully updated on this chart, but we're right there on the cusp of potentially breaking out. So if we break out, there's likely to see further downside. We talked about this bear flag that was forming, right? The possibility of a bear flag breaking down. Well, it broke down today. We'll see if we get continuation, right? Things are getting a little overextended once again, and we'll discuss that. But if we take a look at the BP chart, we went over, 50 of these yesterday, and we're overbought, okay? So does it make sense that we're, once you get overbought, it sells off a little bit? Okay. So that is what's taking place, and we're still in the overbought area there for BP SPX. Now, a couple of interesting things. First, let's take a look at this. This is the SPY. This is the expected move for the remainder of the week. We are sitting at a 33% vol, 34% vol. It's plus or minus $7. The market has not slowed down, people. This is very violent type trade. So yeah, we can be up $7 tomorrow. We can be down $7 tomorrow, or by the end of the week. So the expected move has now increased. Absolutely crazy. Now I have some anchored VWAPs on the screen. This is October's anchored VWAP, and this is November's monthly anchored VWAP. So clearly we're below the monthly anchored VWAP. So we're going to continue to watch that and see how it develops, right? There's only been 2 trading days, but if we can get above that, that'd be a bullish sign. Now we are still above the October anchored VWAP, and we're still above the bottom right here. This was actually the 2022 low, and it was also the CPI print. Remember, we had that huge move down and then it kind of recovered. Well, we're above those. We're actually about to test it. So if this level can hold, that would actually be a good sign, right? So say if price comes down, right, we doodle around, something like that, and we start breaking back out, and then we go test wherever this, wherever the the month to date anchor VWAP is. And if we can get above that, that's actually pretty bullish, okay? So we'll continue to monitor and see how it develops. Now, overall, we are below the weekly expected move. We cracked through the Fed rate decision expected move, which we discussed yesterday. I'm going to remove those off the screen. This could very well be a possible inverse head and shoulder, or sorry, a head and shoulder pattern, right? Where we had that head, or sorry, the left shoulder, head, and the right shoulder, and we break down potentially, you know, and come back into this chop box, right? This is where all that violent trade was, and then we exploded to the upside. Well, now we're back below it. If it continues to go lower, it can get quite violent as well. We're also below a 5-day moving average, and the RSI is getting a little overextended here, okay? So if you think that we're going to rally, okay, cool. Maybe we just doodle around, flag out again right by the lower weekly expected move, and then we'll see how this continues off. I like I said, we're expecting about a what was it, a $7 expected move still to the end of the week. So in 2 days, that's a huge move, people. Okay, so we can see some violence once again. Now, if we look at the 65-minute time frame, it's a little bit easier to see this. But we talked about the possibility for this inverse head and shoulders, right? Hey, we broke out. Hey, it could be just back testing right now. If I were to just draw, a line from yeah, we'll just draw a line like that. It's a inverse head and shoulders. We broke out. This could just be a back test. So if we come down, we see more violence in trade. Always be aware that if things get overextended, we could bounce right back up. That doesn't mean that we're, all of a sudden bullish. We can still bear flagging and still take another leg lower. This is where you got to be patient and wait for trades to set up. We're right now in a period of expansion. So now we wait for things to contract. If you take a look at the Qs, this is a whole different story. It cracked through. Obviously, it's below the November, the October, and we got below the anchored VWAP on the CPI day, which is also the low there in 2022. Okay, so yeah, it cracked it significantly. So if we do start seeing this bounce up, start to look at these levels as potential areas of resistance. The longer this stays down, these will curl down further, and we can see here if it wants to, break back out or potentially take another leg lower in this form, potentially for another bear flag, okay? So be aware of that. Now, if we take a look at why the Qs are getting smashed, well, simply because look at the mega cap stocks. This is absolutely bonkers. If you look at week-to-date performance, I'm pretty sure Amazon's down like 20 to 30%, and same with Meta in a week. It's absolutely bonkers, people, okay? And I know the first thing on people's mind is, oh, it's a good time to buy. And they might be right. It might be. But we are in a very, very volatile period right now. So if you are buying for the long term, I can understand potentially why, but do so responsibly. Be careful with your money because we are in violent times. So you have to withstand that volatility. I like Brian Shannon is one of the traders that I love to follow. He actually designed these anchored VWAPs, and he has a book coming out soon. But he always states that if it doesn't scare you out, it'll wear you out. And what he means by that is you might catch, you might here, and then it keeps going down, and you'd be like, okay, if it didn't scare you out and you're still good, it might just go sideways, and you might see other things rallying and all this excitement somewhere else, and you might be like, it weared me out, so I'm just gonna get out, and then all of a sudden it takes off, okay? That's what happens in stage one, which is the accumulation phase. If we take a look at the 65-minute time frame, we did break down through the weekly expected move here too as well. So we'll see how that plays out tomorrow. This is not where I would necessarily step in short, and it's not necessarily where I'd step in long. I'd be cautious. We have a 65-minute RSI that is overbought. And like I said, we're below the expected move for, today we broke through it, and then also the weekly expected moves. Now, if you take a look at the 15-minute time frame, also to note, it is over in the oversold condition, looking to come potentially fill this gap up. Now, remember, if price comes down to here, the lower range of this chop box, to be quite honest, we're still forming the possibility for an inverse head and shoulders. It is still a possibility. Now, we're below a declining 5-day moving average, so you got to be patient, right? So if it comes down further and we stay above this high over, or this low right here, that'd be positive. You'd want to see it bounce around, maybe a little higher low right here, double bottom. It starts to take off, and then we still would need to crack this neckline over here, okay? Which, if we crack that neckline, we'd have to definitely get back above that declining 5-day moving average. Well, it's rather neutral, but it's starting to decline. If we take a look at IWM, this one's been holding up relatively well. It had the worst performance on the day out of these index products. It got completely cracked. But if we take a look here, it's still above the the CPI anchored VWAP below, right? And then also the October month to date, or October anchored VWAP, we're below the month to date one. So if this continues to get hit too as well, it'd be coming into an area where we consider that chop box too as well. So it can come down into it and potentially, you know, we'd want to look for something like that. You want to see a higher low, right? I'm trying to look for the bullish case scenario. I don't, because like I said, if you weren't positioned for this, you missed it, right? It could go lower, but it could rip your face off, all right? So you got to be patient. You got to see how it sets up. If you are, this is the daily time frame, by the way. If we jump into the 65-minute, you want to be patient, right? We're still off the weekly expected move. You want to see it flag out, right? Flag out. And then you might be like, okay, now it can be time to short for a leg down. You want to see what it does, okay? If you're shorting into the lower weekly expected move, I mean, that's a dangerous area because it could like maybe go a little lower. You might hold on to it and then it could snap right back up to it and so forth. And you can get caught in trades. Your capital can be tied up. So be patient. Watch to see how it plays out. Okay, if we look at the 15-minute time frame on this, that wedge that we talked about bear flags yesterday. We talked about wedges. They all broke down. And then there's the chop box right there. I'm not going to get too much into that. Let's take a look at semiconductors. SMH, it is actually getting closed just right next to the October anchored VWAP, and then also the month-to-date anchored VWAP. It's well below, but it is still above here. Now, the reason why I'm showing semiconductors is because it's a huge component to the NASDAQ composite. So if these get cracked and we start breaking down, say if we take out this, so for example, right here, this anchored VWAP from this low, that's an important one on that CPI date. If that starts to become a level of resistance, say if we crack down and then we start holding, you know, getting it like that and it starts heading lower, that could set up the possibility to go retest lows, which would mean to me that this right here is a bear flag and we're getting a full breakdown, right? We can see a snapback, whatever. But if that's the case, we'll probably see the NASDAQ composite continue to get hit too as well, because this, like I said, makes up a huge portion of the NASDAQ composite. And then if we take a look at DIA, this is the diamonds, the Dow Jones Industrials. This one's doing by far the best. Now, it did come into that 200-day moving average, which is not on my screen. And now we had an outside trading candle. Take a look here at this candle. It engulfed, right? If you just look, it engulfed the last 3 days. Boom, the last 3, 1, 2, 3 trading days, and it closed at the low. So this is a reversal type candle. Doesn't mean that it's going to reverse completely and head straight down, right, without, you know, potentially bouncing around, but that is not a good sign overall. It got extended. It needs to consolidate. We'll see how it consolidates. It's still way above these anchored VWAPs over here. So if we get continued sell side, look for a potential bounce, look at this for a place for potential, obviously, support going into, if we were to go down to those levels, I should say. Now, I want to get more granular at the important sector to watch. And I'll go over that utilizing the zones. We talked about that, how the downside was growing and the upside was minimizing. And well, look at what took place today. This is a great risk management tool that I share with share in my Patreon community. If you're interested in this, it's $9 a month. And if you do it annually, you save money. I'm not going to explain too much of this, but I will say one thing. If you do sign up, you need to have a Discord, okay? If you need to link your Discord up to Patreon. That's where I post everything, because I get some people that come in here and they're like, "Where's your posts?" Everything's on Discord, okay? From trade ideas to weekly expected moves that I track to the zones to indicators, whatever, and then all the community stuff too. Okay, back to over here. There's a couple of things I want to call out. So first and foremost, I want you to look at XLC, boom, and then I want you to look at XLY, boom. Okay, so the downside and upside are right here. So the downside is 1%, the upside is 8.2. That doesn't mean it's probable, but I just want you to know where this stands within the zones. And then we have XLC. It has, you know, a 0.5 point to the downside, 10% to the upside. So it's at the lower end of these zones, which tells me this isn't the greatest area to short those two areas. Now, XLY has a lot of weighting into the SPY, so that's a big dog. And if you take a look at the other big dog, like, for example, tech, where's tech? XLK, where are you hiding, man? XLK, shadabadoom. There we go. XLK, it still has possibility, obviously, for some downside, right? And doesn't mean that it can't go lower than this, right? These are dynamic, they're changing, but where it stands now is towards the lower end of that zone. So if we do start getting some sort of a bounce, right, or back to the weekly expected moves, these will adjust and these will change. But the one that I want you to pay close attention to is one of the big 3 horsemen, right? The 3 horsemen of the SP 500 is financials, it's consumer discretionary, and it is technology right here, okay? So these ones have gotten beat down, All right, XLK and XLY, but financials, if the market's going to head lower, watch out for financials because they're going to come for financials. Now, if I show you XLY, this was a bear flag, right? Boom. It broke down, had some strong volume, distribution day. Doesn't mean that it can't go back up and test and then head lower or break down lower from here to test this low. That's always a possibility. Okay, and then same with XLC. This looks like it's a matching low or potentially a brand new 52-week low. Big move to the downside with some big volume too. MACD crossed over, right? It's bearish, okay? But it's at the lower end of the zone, so it's not where I necessarily short. Look at financials. Financials are the area to watch. Tag the 200-day. It's been on a monster run to the upside, okay? So if financials get tagged, right, SP500 would have been significantly down. I was looking at this intraday, and as the financials were heading up, right, floating around, I even posted on Twitter, I was like, it's the glue that's holding the SPY together. If financials get cracked, the SPY is going to go down lower. Well, guess what? Financials got cracked and everything went down lower. So is this a turning point to continue the trend, right? We moved up and then we came back down. We moved up, put in a lower high, and then we potentially might move back down. So be very careful there. Now, if I dig in deeper, you can look at the top 15 holdies of financials, and you got Berkshire, JPM, Bank of America, Fargo, Goldman Sachs. I'm not going to share all of these charts, but I'll share one because I found a similarity in all of these, which could mark a potential reversal. And that similarity here is this technical candle, right, called the shooting star candle. And that right there could potentially mark a turning point. So we have a strong move up. Okay, it was just pressing. Now we're starting to see signs of a potential, remember, potential reversal, and you can see that in the upper wick. So this at one point, right, this was one big green candle, okay, but then the bears stepped in and closed at the low, okay. So, and then if you look here, a couple other things, it pulled into a prior area of supply. Right here you saw the move to the downside. Okay, so this doesn't mean it's going to crash all the way down, but it is potentially setting up for a period of consolidation, a potential pullback, and so forth. A couple other things to watch is sometimes on these blow-off moves, you get expanded volume, and we got that. Now we have strong relative strength, and the RSI got a little overbought here. Okay, so it's not a guaranteed thing. However, it does open the possibilities for a good short play from a risk to reward standpoint, meaning that if you were to take a short, up into this area and have, a stop loss, whatever, a little bit higher or just around there, the possibility for reward to the downside is quite great, especially if you're measuring all the way down here, but a lot of traders wouldn't do that. They might be like, okay, maybe see if it goes back to the 200-day or the 50-day or, right to where this other chop is right up in here. So that is what I want you to pay attention to. If the market's going to continue to go down, if you're bearish, this is the area where you want to keep an eye on. That's all I got for you on today's episode. Everybody, see you later.